Hey, good evening, everybody. Once again, Brad Hesselberg here with the Market Forge, and just wanted to go over the week recap and what I'm looking into next week. And then, just as always, we kick this off. I am a financial advisor, but this is not financial advice. I'm not your advisor. I can't give you advice. This is simply for educational and entertainment purposes only. So let's go ahead and get this thing kicked off. So, what we saw this week were that headlines were loud, right? So, there were some decent sized headlines that came out this week. We had the Jerome Powell criminal investigation that we had to kick off the week, which ended up being a bit of a nothing burger. We'll see how this evolves over time, but markets didn't really care. CPI data came in pretty much as expected. There is some conversation about going credit card caps, the 10% that Trump talked about. Some of the credit card companies sold off a little bit, but overall had very minimal impact on the overall market. Now, what we like about that is that even though we had those headlines, markets were relatively calm. All right. What we saw last week in the charts, we continue to see this week, where we're not seeing distribution, we are seeing rotation, which is a sign of a healthy market. Okay. If something were wrong, we would see it in the volatility, and we just haven't seen it. Volatility index is actually moved lower this past week, so the volatility is not there, and prices aren't going parabolic. They're moving to the upside, but not aggressively, which you like to see in this kind of expanding market. So we start out with the S&P 500, the old tried and true, because this is what a lot of people are going to look at initially when they're gauging markets, which makes a ton of sense. So just like last week when we were looking at this, we've got higher highs and higher lows, right? So it's continued to grind higher. I marked out some key spots that I'm paying attention to. Basically, with the S&P 500, some things that I like. We have found pretty good support over this weekly VWAP, which just shows support, right? The market continues to move higher. So we did hit an all-time high, and we did pull back slightly. Nothing that I would be overly concerned about. What I'm looking for, as long as it stays above this green bar, we are looking pretty good. Um, Really, where I start wanting to pay attention is if we get down to this red area. That doesn't mean it's end game or anything along those lines, but that's just the next area I'm going to be watching if we do end up getting some volatility to the downside. If we get into this red box, we find some level of support and they continue to move higher, that's perfectly normal. If we get into this red box and it starts to break down and we break down below, this candle, then something's going on and we need to look at other aspects of the market to try and gauge that. But for right now, things look good. Look, this is digestion. It's not distribution. We have calm highs, right? Like I said, we don't have big volatility, big candles to the upside or the downside. It's very calm. Okay, so that's pretty healthy. That shows a pretty good healthy market. The next one they want to jump into is the triple Qs or the Nasdaq, right? This is QQQs. Pretty good indicator of where the Nasdaq's sitting. So just like when we looked at last week, is the Nasdaq or tech basically is not participating in this rally, right? So like the S&P is moving to the upside. You can see it; it's clear. S&P is moving to the upside. Nasdaq is, I would have. It is a bit of a downtrend, but it's still you still have higher lows, right? So it's still trending up this way, but you're getting lower highs, right? So it shows consolidation, um, and that's perfectly healthy. Tech has carried this market for the last several years, and if you've seen really the S&P continue to move higher, and you've seen the Nasdaq in a downtrend, that's okay. That means that the S&P is performing well. The overall markets are leading tech, which is what we need, right? We've been so heavily focused on tech and AI, and nothing else has been part of these moves. Now we're seeing the market continue to move to the upside while tech kind of trades down or sideways. That's great. That's actually really healthy. We want to see that it shows that there's breadth in this market, that other sectors are picking up the slack and helping the S&P move to the upside. That's really important to understand that. This is rotation. Okay? It's very normal. I mean, if you just think psychologically, if I bought Nvidia in 2022 and I'm up hundreds of percent in my position, at some point I'm going to look to take some profit on that and rotate into some other sectors if I feel like there's a good opportunity there. And it looks like that's what investors are doing. They're rotating out of the mega caps. Institutions are getting out of the mega caps because they see the expansion in the other aspects of the market. That's good. That's very healthy. There's no signs of forced selling or breakdown or anything like that. Okay, you don't have big heavy candles to the downside. I mean, you have a couple if you look back a couple of months, but for the most part, it's relatively calm. And I'll tell you, if tech decides to get involved in this move to the upside, that would probably look pretty healthy. Something that I'd be looking for. Look, it's not broken. Okay, tech is fine. It's just giving us a little bit of reset. Sometimes leadership shows fatigue. It's not failure. Okay, everything looks good here. Next, we want to go over to the equally weighted S&P 500. Now, why would we do that? Well, because if it's equally weighted, so if you know anything about the S&P 500, you know that the larger caps or the mega caps take up a higher weighting in the S&P's overall return, right? In the last couple of years, it's been Nvidia, it's been Tesla, it's been Apple, it's been the Mag 7. They've really carried that. So the top of the S&P was very, very heavy. And usually you would see the equally weighted S&P struggle. It wouldn't move to the upside as much as the traditional S&P would. Well, it's a little bit different now. Actually, you look at the S&P, it feels like we've got maybe a little consolidation here at the top. The equally weighted one isn't showing quite that level of consolidation. So what I'm looking for is what do we do here? You see, we had this little wick into this green box. We're watching, does it come down and then wick back in, and then do we find support inside this box? If we do, that's healthy. If we wick into this box and we start coming down, then maybe volatility is returning into the market. If we get into this red space, I'm not really paying attention until we get into this red. Okay, this is a previous pretty significant liquidity pocket. You see it ranged here for a little bit and then got its groove and then moved up to the upside. Okay, so it just started to break out of this trend. So if it comes back down here and it can't find support and starts to break down, that's when volatility is returning. That's when something is going on. But as of right now, it looks really good. Okay, continues to move higher. And this is, again, it shows us that we have distribution in the market. We have other stocks carrying the weight that tech has been carrying for several years. That's healthy. That's really what we like to see. This historically supports longer bull market phases, which if you're buying assets, that's what you're looking for. Now, this is the S&P 600. We looked at this last week. This was the big mover. This was the big mover this week. As you can see, we started on a Monday. We were down here. So this is what we were looking at, over the weekend, basically. So this was Monday, and it was just aggressive to the upside, which essentially, from my perspective, confirms that the breadth is taking place. It's more of a risk-on environment. Small caps are doing really well. I thought maybe that we would get to the top of this green box and we would reject because, sometimes you don't break all-time highs. You hit the all-time high and then you come back and it's got to cool off a little bit in order to get up enough steam in order to break that all-time high. It just blew right through it and showed really, really good strength. We called this one last week. Small caps don't lead in a recession. Okay, that's not the way that this thing works. This is one to remember. This is one to remember. This is one I'm going to be watching closely because it was my indicator over the weekend, and it was the main thing I was looking at all week. This confirmed that markets wanted to grind higher. So that's good stuff. Yeah. So the next one we wanted to look at is the industrial sector. So you can see here that it was in this like multi-month range here from July of 2025, and then it started breaking out here in December, and then went ahead and followed through into a really beautiful move up into this green box. So why am I looking at industrials? Because it's linked to capital spending and infrastructure activity. What do I mean by that? Well, are people, is our businesses, our banks, are they investing in businesses? Are they actively expanding? If your industrials are moving to the upside, that means that overall business is expanding inside of the U.S., because this is going to be U.S. related, right? So it supports earning durability narrative, right? This basically says that the market is expanding, which if you listen to the news, it seems like it's the opposite of that. But this industrials chart, this information, investors are telling you that they're expecting expansion into the U.S. economy, not the opposite, not a recession. This is not typical in a defensive or risk-off environment. This is typical in an expanding, growing environment. So that's why it's always important to look at the data and not necessarily the headlines. If the markets respond aggressively to the headlines, then maybe the headlines are telling you something. But if the markets are doing opposite of the headlines, don't be afraid to be a contrarian. The data tells you a lot of what you need to know. Because markets have become very narrative driven. So you have to be paying attention to this information instead of just paying attention to headlines, because it can and will lead you astray. So this one's very important from that perspective. Now we've gotten into this green box, right? We got this little wick into the green box. So what I'm looking for is continuation. If we continue up here, maybe we consolidate and grind a little bit and continue to move up to the upside. That tells me that this market is looking to expand. That is very healthy. That's where we want to be. If we get up here and we reject, maybe wick into this green box, get a couple of strong wicks into this green box, and then move to the downside, that means that buyers weren't interested. They're not interested at those highs. It might suggest something, it might not. It's all going to matter on where it moves from there. If we retrace this move, that's a concern. Okay, then this could have been a trap, and we get it back into this space. If it comes back down here and it just wants to consolidate and then makes its way back up, perfectly normal, perfectly healthy. I'm not showing any concern until we get down into this space right here. So that's what I'm looking for, just from a really simple perspective. The next one is going to be our transportation ETF. Okay, so as you can see here, they are consolidating at highs. Okay, so we got up into this box right on the money, and then we're making our way, grinding higher into the box. You can see that it's finding these white VWAPs and finding support. It looks bullish. It looks strong. Suggests if we have strong price action to the upside on this one, it suggests continued movement of goods and demand. That means that there is demand for supplies, right? Really, markets break down to supply and demand. How much demand is there for something? And if there's not enough demand, then prices can go down. Or if there's too much supply and not enough demand, prices go down, and vice versa. Okay, so if this is moving up, that means that there is demand. Okay, transportation is a really good way to understand what people are doing. Look, it is a real economy confirmation signal. Okay, this tells you what is actively going on in the community, and it supports industrials and small cap strength, which goes back to the S&P 600. Look, stuff is moving. This is old school confirmation, right? And then again, we're looking at the energy select sector. What does it tell us? Energy breaking higher after a long consolidation. It's not unusual for commodities to consolidate for long periods of time. You look back at gold and silver, oil, things along those lines. It can consolidate for a while. I would say you've basically been consolidating since June of 2025, and then you've slowly grinded your way up to this nice breakout, above this line. If it breaks higher, again, economy is doing well. It often performs well during inflationary or late cycle periods, which is what it looks like here. When you have small caps starting to do well, that's late cycle stuff. That's business expansion type environment. All of this tells us that that's where we're headed. Okay, again, headlines might tell us different, but the data, the buyers, the investing tells us that we're late cycle, we're business expansion, and that's what everybody's looking at. Energy's confirming it's not leading. Late. This is a late cycle asset. It's waking up. Okay, that's what that's going to tell us. We want to make sure that we touch on gold. So, I mean, you've basically known that gold has performed unbelievably well in 2025, and going into 2026, silver is certainly led. There's no question about that. It looks like we're kind of consolidating up here at the highs. We had a decent accumulation phase down here, but it has been aggressive. But what I'm looking at, it's rising with equities. It's not replacing them. Okay, so yeah, there certainly is reason to believe in the debasement trade. It seems likely that, if you look at traditional Fed policy or Fed cycles, you get tightening cycles, which this time we had a long one from 2022 till the end of 2025. Then they go into this sort of neutral phase, and then at some point maybe you get some easing where they start pumping money into the system. We're not there yet, but gold bugs see that coming. Central banks see that coming, and that's why gold has performed as well as it has. Now let's watch and see what it does. If we get some strong wicks up into the green box, and then we see downside movement, I don't get worried until we get into this red box. Really, we'd have to get down to here before I'm even batting an eyelash as far as gold concerns go. Now it's possible that it runs out a bit of its steam, and we see a rotation of some other metals or some other assets. But right now, gold is moving with assets. That's perfectly fine with me. Late cycle behavior, nothing that I'm getting spooked about. It's not fear. Look, it's hedging. Okay, capital protection. They're protecting their purchasing power. Okay, that's what this trade is all about. And then the ultimate risk thermometer is Bitcoin. Okay, so we see a lot of signals that we're at late cycle expansion territory. We're not at recession territory. The last indicator I'm looking at is Bitcoin, because to me that's the ultimate canary in the coal mine. Is it always right? Of course not. Nothing is. But to me, it's one of the things that I look at to try and figure out, really, is risk truly on? Because if risk is truly on, then you'll see it in Bitcoin, and you'll start seeing it in some of the altcoins as well. Now, maybe that's something that we'll bring up on later shows, but for right now, I'm just looking at Bitcoin. It's an early liquidity indicator, 100%. Right now, it's in it's in a bit of a range. You looks kind of like a bear flag, which they usually move to the downside. But with that said, it has shown some pretty strong price action. We've gotten out of this red box where it's consolidated. If we can stay above that, things are looking pretty good. If we can get up into this green box and we can hold it, then things are going to look really good, and it's going to look very much risk on again from that perspective. This is the last domino that I'm going to be looking at. There was some big concerns about the 4-year cycle. If you follow Bitcoin or anything along those lines, typically there's a 4-year cycle where we've expanded past that 4-year cycle. Now there's a whole argument about, is there a 5th-year cycle? Is it a 4-year cycle? We're about to find out. I think we're going to definitely find out. If we get back into this green box and then we sell off aggressively, then same old, same old. And then I'm going to start wondering if maybe some of these higher prices in the small caps and the industrials is a bit of a fake out. Maybe. But this is going to be the last one that I'm looking at. Risk appetite has not disappeared. Okay. That's a tell. It's not in the headline. So overall, markets are rotating with strength. They're not breaking down. They look healthy. They're consolidating where they need to. Your breadth, your small caps, and your cyclicals matter more than the headlines. I hope that came clear through this. I'm watching the data. I'm watching the buyers and the investors and where they're putting their money. That's mostly what I need to know. I'll pay attention to the headlines, but like I pointed out earlier, the headlines had no impact on this week. It just grinded higher in all the areas that we're looking at to confirm our thesis. If we see any pullbacks, they're probably resets unless they get into the areas that I pointed out and they can't hold up. And volatility will show up before price does, and it hasn't. I mean, we can look at volatility real quick. It moved lower. I didn't even bring it up this week. It moved lower than it did last week. So volatility is not there. Could it return in a hurry? You bet. Absolutely. But right now, volatility is not there. So these equities just continue to grind higher. Look, markets don't move in a straight line. Healthy ones broaden before they break. What I think we're seeing is we're seeing the broadening of the market. We've all been waiting for this for quite some time. AI carried the overall markets. Now it looks like the rest of the equities are stepping in to kind of relieve AI from that. Some things I'm looking for next week. We got a whole nother week of earnings. We'll see how that goes. We had earnings this week. Didn't have a huge swing one way or another. Markets just continue to grind higher. We've got preliminary PMI. So I look at PMI somewhat regularly. It's important. It's basically the manufacturing gauge. So really, the key indicator is if it's below 50, it's bearish. If it's above 50, it's bullish. Right now, it's about 48.5. Right, it's just below 50, and it's been consolidating under there for a while. It's actually been below 50 for years. So if we see that preliminary PMI move to the upside, it's going to confirm what we've been talking about over the last 2 weeks, that we're seeing expansion in the small caps, in the industrials, which tells us that the overall economy is looking to expand. That PMI plus Bitcoin would be an absolute, like, just key indicator that we're moving in the right direction. And then consumer sentiment. We'll get some consumer sentiment data this week. That could give us some indicator. I'm looking more closely at the PMI and Bitcoin. Those are going to be my indicators going into the week as to where we're headed. But thanks for jumping on. If you have any questions, you have anything to say, check out the comments. Like I mentioned, I'm a financial advisor. If you have any interest, you can click on my link at the Market Forge down below. It goes into all the details about how my services are set up. And then I also have a link to my free blueprint. It's a PDF that I built just kind of with the way that I look at markets. And it's a great tool to implement if you're looking to grow or learn new things when it comes to market and market analysis. Anyway, everybody, enjoy the rest of your Saturday. Take care.